Hello, YouTube. Bostic pumps the stock market, but is it real? We're going to talk about that today because we finally got something we've been looking at for the last I don't know, about 2 or 3 weeks, going back to February 15th, or the last day that we actually closed green with a higher close, which means it's a hollow green candle. We have not had one of those until today. And we have a bullish engulfing candle. We're back over the 50. And days like today are why I love the stock market. We get to see basically a chess game being played in real time between the Bulls and the Bears, and it is just so fun. It's fun because the evidence is laying out that if we're going to be getting a move higher, I know exactly what I'm going to be looking for. So stay tuned and throughout this video, and please make sure to stay tuned till the end if you want to see all of the evidence. But this is what moved it. And then we'll come back and talk about whether or not this is what should have happened. So we have the news and then the reaction to the news. The news is that Fed's Bostic is open to seeking a higher rate, and the quarter point rate rise is where he is. He's firmly in that camp. Quarter point U.S. rate hike increases best, right? So now we're going to talk about what we said about 2 days ago, where gap ups are for selling. What was today for? Well, today's gap down was for buying. Woo! We went higher. So what exactly happened? Well, sorry, something else I want to mention here is just that the fear and greed is right back to the middle. So what does this mean? It means that both the Bulls and the Bears are going to see on the chart what they want. Why? Because we're neutral, which means there is no edge. We're not in greed. We're not in fear. We've been in greed for over a month, extreme greed to greed to greed, down here to neutral. Are we going to go back up, or are we going to get pushed down? That's what's really important. Are we going to get knocked up or finally birth a new bull market, or are we going to get knocked down and resume the bear? All right, I think we have a great show for you today. Let's go. Here's what I mentioned to our group this morning at 9 a.m. Eastern. I said we are set to open with a gap down, and gap downs are for, that's right, gap downs are for buying. Set to open below the 200 DMA. Will be the second day in a row if it holds. We didn't. We are also set to open right on our uptrend. So let's have a look here and see exactly what that is, because I think these notes can give you a lot of context in regards to what we lay out. But then we also provide a 30-minute, not a 30-minute, but I don't know, like between 10 and 30-minute video in the morning. So that's what we talked about. And I actually walked away from the screen today because I've been on a hot streak so far this year, and I want to learn from Warren Buffett and what you can learn from Warren Buffett's mistakes. That's what I'm going to talk about a little bit later in the show. So stay tuned for that, because I intentionally did not stay at the screen for a large part of the day, which meant I had very little temptation, and I'm crushing it. I'm so happy right now. Anyways, here we go. So the first thing I just want to point out is that we now actually have a failed weekly breakdown, which means we broke down, but we failed to hold it. And because today is Thursday, man, it's going to be interesting tomorrow. We're going to be watching for the 50 MA, which is just the blue line and the blue number. And that is right here at 399.17. So if the Bulls can just get us a little bit higher tomorrow, I don't know what that's going to mean. I think we're going to have to watch. That's a pretty big wick in the bottom. So just like we were talking about the upper wicks and the lower wicks, we have to see where tomorrow's candle is going to close out, and it's going to be Friday. Reminder, we'll have a stream at the end of the day to walk you through that. Second thing here is that we're right on our downtrend. So on the weekly, we've hit this area, and every single time we've rejected until this most recent rip. So we dip, we rip, we come right back down. I'm not sure this is a real move, by the way, which is why I'm skeptical, but I also think there's times to trade and be opportunistic and times when you shouldn't. So far, we've had a 20.2% rally, but we've not managed to hold it. Here's what's also notable. We got pretty big volume. So last week was a shortened week, but man, that volume is pretty strong here. So if we close red or green, I think it will be notable. One more thing. Sorry, boomer eyes. We're going to have to actually go here to hollow candles on the weekly, because now you're going to note that we have a green candle, which means that we're actually set to close higher on the week if we can hold 396. That's why the candle's solid, which means it's closed lower than it opened, but it's green. So again, remembering that different types of data can give us different stories. So when we look here on the full candles for those boomer eyes, and if you guys wouldn't mind smashing the thumbs up to support the channel, I would greatly appreciate that. And please consider subscribing to the channel if you're new here. We put out videos every single day, and we love having people to just come and hang out and talk about stocks. Here we go. So where we close on the weekly is going to be important. And the same thing we see here on the weekly is also going to be happening on the monthly. So there's a monthly breakdown right now. But if we go back here to our daily chart, and those notes I just mentioned from before, here's what's interesting. I've been trying to understand, because I was away from my desk for a little bit today. And what I noticed that I'm trying to see if the saying is history does not repeat itself, but it often rhymes. So is there anything on here I can look back to and say, okay, this looks similar? Well, yes. We have a head and shoulders, right? Then we have the slant down here. Here we have a head and shoulders. We have the slant down. And when we invalidate the head and shoulders or form a cup, and then the back test and the bounce, well, then this head and shoulders is no longer valid. So that's what I'm trying to figure out here. Where are we invalid? Well, I'm looking at about 401.44 as our neckline or the white line, which goes back to our June gap. And the second thing here is just that when we zoom in nice and close, we're closing at the high of the day, which means if we're going to get continuation into Friday, it should be there. We got a bullish engulfing candle. That's pretty bold. Open below the 200, powered up. We have not yet had a single day close below the 200. And we've had one below, one above, two below, one above. Man, it's getting really choppy in here. Like what we mentioned before, where there's supply and demand. There's demand from people who are covering, demand from people who are buying or initiating, and then selling for people who are like, man, just I don't want to get hurt anymore. So if I look back here to the pattern on the daily, this is the story that I want to leave you with because it's simple. And then we're going to talk about what Bostic said and then that lesson at the end here. So head and shoulders, right? Here we go, head and shoulders. And we're going to focus on the downtrend now, or the most recent, this line right here. So it's not a sharp downtrend, but for a lot of days here, let's actually go back to hollow. Let's see if there's any extra data. Nope. We actually had pretty nice rips here where we got green days in the hollow. So this rally right here is actually stronger, I would say, than this one over here. And I would say that because we have those hollow green candles. But once we start breaking out, right, we tap it, we could back off again, and then we could go for the break, or we could be ready for the break right now. I'm not sure. Drop me a comment and tell me what you think. And we were also below the 50 here. So it's interesting. If we're going to go for it, we could break the downtrend tomorrow by just going flat. We'd have to fall back below the 50 DMA to keep it really simple, to not hold that area. So we could back test and go higher, just like here we back tested, then went higher. We could also just go lower, right? That's an option too. Can't dismiss that. That's what I think is going to happen. But maybe not right now. Maybe we got to maintain the range a little bit more, right? Get choppy, then discover a range, and go back up. Man, we just got to pay attention and assess the landscape as we are trying to navigate this market because it's tough right now. I'm not going to lie. So that's pretty much it. If we can stop going down, maybe we can start going back up. And then the bullish pattern we're going to look for is going to be a potential cup where we don't get to the top initially, back test, then complete the cup. So what would that mean? Well, we're probably looking for a pushback up to 415 if we can repeat the whole pattern. But if we're going to fizzle out about halfway the way through, so this range right here, we made it about halfway on our first push. So our impulse move pushed us higher. We backtest the previous tops, then we go for the fill. That's if it ultimately completes. Again, there's a lot of ifs here. So here's what I'm watching for. Can we invalidate the head and shoulders by what? Not only stop going down, but also get a close above 401.44. And then when does that happen? Is it in a few days? Is it by next week? Is it the following week? And then what does it look like when we're there? Is there volume? What's the price action look like? That's what we're going to be watching for. So if we look at QQQ as well, here's where the story is a little bit different just because we gap below the 200 as well, just like SPY. But we've not yet actually had a session close below either. The 50's been saved. It's been defended. The black line, or the gray one here at about 290, our 200 DMA on QQQ, it's been violated, right? Only today, bounce, and then gap down, pump up. Those are usually reversal signals. All right, now let's talk about the bear scenario briefly, and then we'll look at Bostic's comments a little bit more. All right, dollar's up. So dollar's up. Dollar doesn't agree with Bostic. It's saying, I don't care. Here's what I think is happening. There's two headlines here, actually a number of headlines. So seeking higher rate. Okay, but we're not going to get there as fast. So slower, but higher. That's how I'm reading it. The dollar says, yep, longer. It's strong. So that usually means that hawkish. VIX is down pretty dramatically. So that's a big stomp back below 20, back below the 50 DMA. That's a notch for the bulls. Look into the 2-year note. This is where both teams can probably see what they want. So let's think about this. We have a shooting star, and it's also a failed breakout on the 1 day, right? On the 1 day chart, failed breakout, shooting star, and marginally green. Right here at about 4.9. All right, and then 10-year note. 10-year note, bullish day, up 1.6%, at near the high of the day, nicely breaking bullish, over 4 on a close. Man, that's strong. Yep, because it's also at the high of the month now too, monthly higher high. Okay, So if we read these headlines, can we understand what all these signals are telling us? Because I think this move is overdone. That's what I think. I don't think we should be at this high. I'll go through and tell you a quick story, and then we'll talk about that Berkshire Hathaway thing at the end here. All right. Fed's Bostic open to seeking higher rates. So the 10-year note, the dollar, those are saying, okay, yep, longer. Here's why the VIX and the 2-year note are down. Quarter point, right? Firmly in the quarter point camps. What does that mean? Less short-term volatility. There's also a few more headlines. Let's go through those right now. So who is this Bostic guy? Well, first of all, he doesn't vote. Doesn't vote last year, this year, votes in 2024. So it's nice he's talking. It's just chirping, though. It's just like Buller, right? He chirps, doesn't vote, though. And where is he on the spectrum of hawks versus doves? Well, he's like the least hawk of the hawks. He's right there. He's the least hawkish of the hawks, barely red. So no surprise. His comments are kind of like, yeah, they're pretty neutral. And that's what we're seeing as a reaction here. So he doesn't vote. He's micro hawkish. All right, notable. Then we look down here to, thank you, Mason, for sharing this, by the way. I actually didn't see this. So let's jump to that next comment. Fed's Bostic could be in position to pause by mid to late summer. Still a long way to go to restore price stability. So what does that talk about? Well, yesterday we saw that the Fed swaps price and peak policy rate of 5.5 in September. So what I'm reading from this is that they've walked it back. September is the start of fall. It's pretty much a late summer. Let's be honest, right? It's pretty much a late summer. So how am I reading this? It means they're likely pricing that 25 basis point at 100% versus the 75 that got dialed back a little bit earlier. Then we look here to the next graphic. Let's get here. All right, we talked about this on the weekend. Not going to beat that dead horse. We're just talking about, so late summer would be July. Summer to late summer would be June, July. We have the SCP in March, June, and September. It's going to have to be backed up with an SCP when they're going to pause. So I'm doubtful it's going to be in June, but hey, there's the reaction to the news. So I'm assessing the news. I'm trying to be objective about the news, but we can't deny the move, right? Different signals from different things, which mean that we have to try to understand this game. Remember, we're playing chess. It's not checkers. We're playing, I used to call it 3D chess. Checkers is easy. Chess is difficult. 3D chess is like, yeah, that's like, it's difficult. It's hard to call. So that's what happened today. All right. And then greed is back to neutral. Please tune in tomorrow for our end of day stream if you want to get all of the fun stuff going into the close. We usually have fun with you guys. So thank you all for tuning in. And here's what I'm going to leave you with today as a lesson. What you can learn from Warren Buffett's mistakes, the incessant talk of Berkshire shareholders' letters about what went wrong may have a purpose. Here's the purpose. Not all that much left to say. Number of words in Warren Buffett shareholder letters, which means that he's just confident in his strategy. He's like, man, I don't care. I don't have a lot to say. It's the same as before, same as before, same as before. Yes, because he's old in his wise age. I think he's the nice young age of like 94, I believe. I could be wrong. I think it's 94. Just trying to think of it off the top of my head. But that's what he's telling us. It's okay to make mistakes, right? It's okay. It's okay to be wrong. It's not okay to stay wrong. And he's self-aware enough to say that, no, he's made some pretty big blunders too, right? Yeah, he's 94. He's been trading for decades. Of course, he's made some blunders, some mistakes, some regrets. But he doesn't latch onto those. So here's what I wanted to leave you with today. Like I mentioned on our pre-market stream, I know what gap downs are for, but I also know that shorting has been rewarded. I would have been shorted. I would have been tempted to short today. Where? On the daily lower high or on the 50 DMA. Man, I would have got blown out. The high of the day yesterday, 396.7. That's another point higher from here. It went as high as about 2 points higher than yesterday's close. And I would have had to have been patient all day. I might have even tried to short the retest on the gap fill in the 200 DMA. And that's part of the reason why I walked away. The last thing I'll leave you with here is that we have to think about what we want from the market, because if we don't tell the market what we want, we're never going to get it. Those who don't plan for success never get it. So you have to understand too, like, am I showing up for work today to fight for my money where I'm bearish, but man, we only need like one daily close below and then a second, and then it gets a lot easier for us to go bear. Right now, these are hard pennies for the bears. We need that next leg lower, and we have to fall back below our primary downtrend. So like, it's okay to walk away from the screen. It's okay not to be in every single trade. It's also okay to be wrong. So with that said, if you've been enjoying the video, I would really appreciate if you could drop me a comment. And if not, the weekend video, which gives you more analysis, should now be queued up on the left-hand side. Thank you so much for watching. I look forward to seeing you tomorrow.